Busy times. All right, so let's get going. Wealth Press Roundtable Live. I'm Laura Cadden. I'm your host today. I'm on the Wealth Press editorial team. Francisco Bermea is handling our chat and technical aspects. Say hey.
Hey, everyone.
There he is.
And the
music. He's there. And then we have Lancey Polito. We have Roger Scott. We have Jess Ananeri. Yay, the usual suspects. So
Jeff,
glad to have
Lance,
you all here.
Laura, how are you guys?
Hey, Roger.
It's good. If I go dark suddenly during this call, it's because I'm getting a booze delivery and I have to sign for it. And in Baltimore, if you do not take your package immediately inside, it's gone. So, so if you see me go dark, Francisco's going to take over, just so you know, and I'll be back in 2 minutes. I just run down the steps, get the booze.
The benefits of living in Baltimore.
Yeah.
When I was there, they told me, so I didn't leave the hotel, and I was at the, what is it, Sandria? It was a nice hotel.
Hendry. I was with you.
Yeah.
Hendry, yes.
That was
Great
nice.
place.
Super
Great
Yeah.
place.
Yeah, we were there.
Yeah, and they said like the day before, there was like a shooting across the street, and like there was a fight outside the port, and I was like, yeah, I'm not leaving.
I thought it was beautiful. I thought the Inner Harbor was beautiful. I just think they need to
Gorgeous
get that.
place.
Yeah.
Absolutely beautiful place. Classic, very classic. I was extremely impressed. But
But
I
was
heard
like a block off of the Inner Harbor. It starts to get a little bit crazy. They're like, let's walk to this restaurant. And we took like a field trip through like Alice in Wonderland. And like 1 minute we're like in this beautiful area. And the next minute I got like dudes on bicycles like
now
circling me like, is that a rollie? And I'm like, dude.
what Jeff, what you just said, I've heard from at least 15 to 20 different people. The exact same thing. It was beautiful then. I walked a few blocks and then I was like, where the hell am I? Like,
It's
yeah, it
fixable,
does change. It does change street to street. But next time you guys are in town, I host a monthly poker night. Just saying.
Ooh, I love
have you
it.
over.
Love it.
And Francisco's sending me a message about the other delivery I'm getting today that I didn't mention. The other delivery I have to sign for because I had to get a background check for it is a taser. They required a background check for a taser.
Oh,
Good
no,
for
you
you.
need to go to the flea market over here. You could buy tasers, batons. You could buy anything you want. $20.
It's true. I love my city, man. I'm born and bred in Baltimore, but you got to be armed. Like, and we don't have to carry
maybe a little bit
taser.
of something more than a taser.
Yeah, I'm cool with the taser. So we'll get started because we have so much to talk about this week. Sorry for the aside. So I have to get my booze and my taser, but I may make it through this call without having to get either. We'll see. So market drop this week. Lance, I want to start with you about options flows. What are you seeing in this crazy market?
Well, there ain't been much. And if you know, I went from very aggressive maybe a month ago to my hands are in my pockets. They're out on the boat. They have not been because the flow has just been non-existent. I mean, if you go, the past couple weeks with the holidays, it's been extremely light. Like I would get probably 20 to 30 signals at least on my scanner now. I'm lucky to get maybe 5 or 6 a day. That's how bad it is. And it's again all very short term, a lot of news driven, like a lot of Apple, obviously with all the news recently. Just nothing really aggressive, very small orders, a little bit of bank flow today ahead of the Fed. But a lot of protection, a lot of calls being sold, which tells me that there's really not a big direction that traders are expecting. So they're closing out their calls or selling calls, usually against a long stock portfolio. Just not much. If you follow my videos every day, I mean, it's like pulling teeth, trying to give you guys 3 names by like 11 a.m. So
aren't you going live today? You're going to live today at 1, aren't you?
I am. I'm going live today at 1 p.m. It's going to be amazing. So be there. I'm expecting, to give you a little bit of a spoiler, December 1st. So tomorrow, things start picking up as we get into the last month of the year, especially because so many people are behind and underwater this year. I think we're going to see a lot of aggressive flow pick up in December. So I've been quiet, but I'm ready to strike.
Well, we'll be sure to add a link to the room at the end of the show so that people can join you at 1 o'clock today. But
Awesome.
we'll move on then, unless you guys want to talk about any options flows you're seeing. Do you have anything to add, Roger or Jeff, on there, or shall we go on to talk about the GDP today?
Well, I just wanted to say that I'm really excited about Lance's class at 1 p.m. I mean, it's going to be good. I'm looking forward to checking it out. I mean, from what I understand, you're going to be talking about how to track unusual option activity, how not to trade momentum, how our information-driven stock market is now the best way to do it is with option flow. So I want to check this out. This is going to be good stuff. You guys always want to learn, so make sure you go there. But let's talk a little bit about the GDP. Do you want me to start off, or do you want
No, go right ahead. Go ahead.
Yeah,
Roger.
well, I think the GDP was slightly better than expected, but I think it was offset by the weak employment numbers, and I think the international trades and goods and services was also bad. So I think it was a couple of things that were a little positive and a lot of things that were a little negative. I'm encouraged by the fact that consumer spending is holding on, but I'm very discouraged by the fact that other data didn't really cause the GDP to really cause any kind of a blip at all. But I think the market's really waiting for later today for we all know who.
How about you, Jeff? Are you on the same page?
Oh yeah, I mean this GDP. It's kind of like we had Black Friday. Everybody's like, oh, Black Friday spending was up 2%. Well, yeah, the inflation's up 8%. Like, trying to fool us again, trying to pull the wool right over our eyes. GDP number. The only thing worse than the U.S. GDP number is the Chinese GDP number, where there's literally like 6 dudes sitting around Beijing that are like, should it be 8% or 10%? And total nonsense. But the real numbers are obviously what stock prices are doing, options prices are doing, and interest rates. And Jay Powell has a massive effect when he starts yapping. And that guy doesn't like I think he's going to be the Grinch who stole Christmas today. I think he's going to come in, and I think they're going to have Jay Powell Grinch cartoons all over the damn internet by tonight. And you guys are going to be like, that guy in Florida might be onto something. He might be a time traveler for 24 hours in advance. He's gonna rain on the parade. You're gonna see interest rates. You're gonna see the 10-year go back above or around 4%. You're gonna see a nasty sell-off in tech. I don't know how much lower it goes from there. I think there might be some Santa Claus in some names, but typically, and I'm gonna talk about this later for all you the guys that want to stick around, there are repeatable patterns in months. That's why there's a stock traders almanac, et cetera, et cetera. December, as Lance was saying and Roger was saying, is a massive month that has clearly delineated patterns of behavior, of human behavior. Specifically, when you've had a really bad down year in a bear market, there's a lot of tax loss harvesting. People like to write those losses off against their winners.
Yeah.
They like to paint the tape on some stocks that were outperformers. They have to show that they were in those names, a lot of portfolio managers. So I got a way to gauge that system, to game that system a little bit that I'd like to talk about. But buckle up, kids. December's going to be crazy, and it's going to start this afternoon at 1:30 p.m.
Yeah, I was going to say 1:30 p.m. It's Powell is, for those who don't know, he's giving a talk from the Hutchins Center.
Thank you.
Make
And the market
announcements.
is anticipating between now and the close today for the S&P 500 about a 38-point move. So it's
That's
about,
awesome. That's good information.
About 1% or so. So the at the money straddle between now and just today, you're looking around 38 to about 40 points. So, you know, if you're wondering why this morning's been so quiet in the market, now you know. So
I would
it's
buy
not
that.
Gonna be.
I would buy that straddle, by the way. I would buy that.
I want to share my screen and show you guys something interesting. I think you guys will like this. This is a study going back to 1930. This shows you if the S&P is down by X amount, what the typical performance for December is. Well, the S&P is now, this is from 1930. Well, the S&P, we're down what over 15-16%. So we're in this bracket right here. This is typical. This is what happens when the S&P is down in December, based on the current scenario since 1930. I don't want to dominate this, but I just kind of wanted to show you that, and that's I think that's pretty eye-opening right there. Since
So we
since you
feel that-
started, sorry, Jeff, I didn't mean to cut you off, but you were talking
No.
about December, and I just wanted to. I was just sharing that with Matt the other day, and I was like, this is so relevant to what Jeff is
So
saying.
people
right
are
now.
asking what a long straddle is in the chat, and I was going to type it, but it's like useful information.
Here, I'll show you guys.
Yeah.
Here's how you do a long straddle. So you go to the SPX, you pull it up on Toss or any platform, whatever you're using. So Toss will actually tell you the market maker's expected move. And this is stuff we'll be talking about today at 1 p.m. Eastern. So MMM right here, well, this MMM, they wrote it cool, means market maker's move. So you can add the at the money calls and puts. So that would be actually about what, 39.5. So you're looking about 21, 22. So let's just say $42 or so, but they'll tell you actually right here. So about 37, $38 or so. Or you can just go to the straddle and find the at the money. So 39, 49.
Combine it
so
already
this-
for you with that.
There
yeah.
you go.
Yeah.
About $43 right now. I personally don't trade the SPX. I think it's
Yeah, it's a little.
a little too expensive.
But the thing,
Yeah.
yeah. So the main information, not the main information. Thank you, Lance. Obviously, that's all. Like people need to see how to look at that and figure that out. So, but when you're long a straddle, you are expecting an outsized move up or down. You don't know what it's going to be, but you know it's going to be more than 1% if you're long a straddle. If you're short a straddle, you're expecting the prices to stay in a narrower band. I'm just trying to be Captain Obvious for like the newer people at home that don't know what we're talking about.
No, and toss is sink or swim for those of you who are
Yeah.
confused by that too. We should clarify. Go ahead, Lance.
Every
Open to-
platform will have a straddle, so you just have to calculate it. Toss just has it labeled as MMM, market makers move. So it's just an easy glance.
So you guys think we're in a bearish momentum regardless of what Powell says? You think it's already pricing in right now?
I don't. I'm actually really bullish.
I don't know. I don't know if it's. I think it's bearish
Hmm.
momentum, but I don't know if it's pricing. I don't know. I don't think the market is pricing it in at all. I mean, I could. Well, let me just show you real quick, and I don't want to. Again, I don't want to dominate this conversation, but this is pretty good stuff that we need to really pay attention to right now. Let me just close this real quick. Show you a couple of quick charts, and you'll see what you know. I don't think it's pricing it in at all. As a matter of fact, I think right now you have a situation where you have an airplane driving in one direction and it's about to make a pretty quick U-turn. Just take a look at this. I mean, if this doesn't scare the living daylights out of you, I don't know what will. Look at this area chart. You've got. This is where the 50-day. This is where we're at with stocks above the 50-day moving average in the S&P. Meanwhile, the S&P is below the 200-day moving average right now. So if this is not a classic, I mean, like textbook, long-term trend down, short-term trend up, I don't know what is. I think for what you are saying to be accurate, Laura, I think that the S&P would have to be right here, just to kind of give you an idea based on what I'm seeing in terms of efficiency. I think the S&P would have to be right around these levels right here, just to make it easier for everybody to see. Right around here, right around the 50-day to right around maybe another about 30 points lower than it is right now. I think then it would be pricing everything in right now. I think right now the market is still relatively hopeful, and I think one of the reasons it's still hopeful is because the CPI and the PPI was really good. The market rallied like a madman. And I think Powell is going to be as Jeff perfectly put it. I think he said the Grinch that stole Christmas. He's going to put some reality into this thing, and we're going to just revert back lower. And I honestly don't know, and I don't know that many pro traders right now that really disagree with what I'm saying, because you could look at the chart, you could look at momentum, you could look at the volatility. They're all saying the same thing. So it's one of those fairly clear-cut situations. It's what I'm proposing is exactly what happened here, and what happened here. It's just exactly the same thing, drifting below the 200. There's just no way the market's capable of sustaining price action above the 200-day moving average right now. I mean, let's be real here. We're not in that economy right now.
Plus, we do see a drop after every time the man speaks in the past year. So
I didn't even
there's
want
that.
And there's that, right? And there's that, right? Exactly. That's a good point, right?
Well, let's talk about China if we're going to stay on the grim news thing. So Apple shares are down 4.5% due to the COVID woes in China. What other companies are we seeing being impacted, or companies that haven't yet really reflected it? Who do you anticipate will be impacted? Do you want to start us off, Jeff?
Anybody that relies on, like, I mean, Tesla's obviously impacted by the supply chain, all you know, all the automobile companies, obviously all big tech. Semiconductor companies are particularly vulnerable to supply chain disruptions out of China. The thing is, it's been so whacked out. Like, you have so many contradictory news stories coming out of China. One day you'll have, you know, an article in Bloomberg that'll say stocks are bid on the rumor that they're gonna loosen restrictions, and you're not gonna have to take a test to walk down the street, and they're not gonna weld you into your house. And then the next day, you're seeing people burning to death, sadly. I mean, like, terribly, horrifically, and protests in the street and riot, you know, cops or military people squelching any, you know, dissent in a violent fashion. So I look at China as a place you can't trust, because they're putting out a propaganda, but would you really want exposure to a place where, like, they're on the brink of complete social unrest, and they really don't, unlike the US, whether you're like right wing, left wing, or whatever, we kind of had a mass vaccination campaign in this country that they did not have. We have an immunity because we reopened and you know, sadly introduced the virus to much broader swaths of the population earlier. So they're kind of behind the curve in dealing with the actual virus compared to the United States and Europe in a massive way. So they're caught between a rock and a hard place, where they haven't really gone past the wildfire stage of COVID. They've got an economy that sucks and people are pissed off about it. And they've got a leader that's hell-bent on showing the world that he's the strongest man out there. So for me, it's all like, but the stocks go up like crazy. Like, the stocks are ripping, right? Like,
The stocks are, I mean, you look at BABA up like freaking 20% in like
but
2
they're all
days.
bear
You
market,
look at-
but they're all bear market short squeeze rallies, right? Like, they're all
Yeah.
stocks that are
Every one of them.
crushed on a
Great
on a
trading
chart.
though.
Great trading.
But what do you
Contra
think about like the car industry? My insurance just went up really big, and the reasons, and I talked to an agent, she said the reasons are that everybody's spending so much money to get parts, all due to China. I mean, do we think that's still going to be impacted as well?
Let me answer that question, but I want to be as specific as possible, and I want to just go back to the discussion on Apple and answer this question in regards to Apple, because we can be specific here. First of all, I agree 100% with what Jeff is saying, and you've been spot on international markets for as long as I've known you. So
Thanks, Roger.
no, it's true. Jeff has a very, very good taste for international markets. But here's what I think in regards to Apple specifically. We don't have to go far. This company that I have the chart on right now, QRVO, Laura, this company makes the chips for the iPad, okay? And they're hurting right now, and I believe they're going to go lower. And they're dealing now with China and Apple issues. So again, if you specifically with Apple, this would be a company that I would use as a gauge, and I would kind of keep this in the back of my mind, because iPad chips for the iPad is a huge industry, and this company is going to, in my opinion, do very, very poorly in the next couple of quarters as a result of what we're seeing with China and as a result of what we're seeing with Apple. And overall, I think it's going to be a cluster, you know what, over the next several months. Auto parts, I don't remember who was telling me. It was somebody just the other day that auto parts are just, it was Murray. Murray was telling me, one of our readers, was just telling me that it's like, it's next to impossible to get auto parts right now for things that you could have easily gotten a few years ago, just like that. So it is becoming a major issue.
Yeah, that's what I was afraid of. Do you have anything to add, Lance?
I will say, I love the autos. I mean, you look at like LI or Li Auto, XPEV, NEO. I just bought more Tesla. I mean, these stocks are squeezing their butts off today, up 15, 20, 30%. Some of these names. I bought STLA calls yesterday with some decent size in them. I love the autos here. Like I can't tell you how much, how bullish I am. Anything except GM. You don't want any GM exposure. But all the other auto names out there, when they move, and the options were relatively inexpensive yesterday. So it was the first decent sized trade I put on in I feel like 2 or 3 weeks. So
Lance, out of curiosity, just out of pure curiosity, why are you not favoring? Why GM? Like you kind of signaled it out.
GM is horrible. I mean, Mary, their CEO is so corrupt. The Hummer was a huge flop, breaking down $140,000 vehicle or so. The Bolt they tried relaunching, which has been a fail.
It was a mess.
They've had so many disasters, and the stock is actually just shy of $40. It's actually, holding up or has held up very well. So there's just not. I think that one, since it hasn't been beat down like some of the other auto names out there, it can still, have some downside left in it. So all the other auto names, even Rivian, people are going to think I'm crazy, but it has a high short float. All the other auto names I love. Just GM. GM's probably too one of the least movers out of the group. So you don't want to be in the
huge.
boring
Yeah,
stuff.
it has a large. The market cap is just massive.
You want more of the speculative stuff.
I got you. I was just curious if I was just curious of your opinion on GM. It's interesting. I share your opinion on GM. I think also it's also extremely overbloated, and I think they're going to lose out on the electric space. I don't think they have as big of an edge as Ford and other companies. That's just my 5 cents.
So very quickly, I just wanted to talk about crypto because BlockFi, of course, declared bankruptcy. Now, a couple of weeks ago, Kathy Woods bought a whole bunch of shares in GBTC, Grayscale Bitcoin Trust, because she really thought it was selling at a discount. Yet we have these companies that are going bankrupt. What do you guys think about the future of crypto overall? Like, do you think it was a wise choice for her to buy GBTC?
Can I share something?
Yes, sir.
Let's do this.
Jeff loves Kathy Woods.
I know.
In this actual situation, so she's going to turn this thing into shit too, because she's got the reverse Midas touch. You see what I'm saying? And it is trading. This is the GBTC. You're looking at it right now. This is on Bloomberg. It shows you what the net asset value of it should be. It should be $15 a share. It's trading at $8.89 a share. It is trading at a 40% discount to its holdings. So as crappy as Bitcoin is, these guys have more Bitcoin than they're being priced to have. And so there's an arbitrage spread being blown out across all these Bitcoin funds where people are long GBTC and they're short Bitcoin, trying to take advantage of that premium discount, that NAV thing that I was just showing you. That's what arbitrageurs do. I used to do crap like that. Now you can get your head handed to you in what seems like a risk-free type of play, because I guarantee you people were looking, let's look at this. People are looking at this premium, this negative 40% and saying, I think that it can't get any crazier. And in trading, that's the famous last words. Famous last words of trading is it can't get any worse. It always can.
Yeah.
Famous last words.
Truth.
Think about that for a second. So there's always room to get worse. I think that I was looking at the GBTC for my own personal purposes because of that discount, because I think there is a place for Bitcoin in the future. I think that there's going to be a nuclear winter in Bitcoin because of this Sam Blank, SBF guy that I told the story about a few weeks ago, and he's
speaking today, by the way. He's a free
How
man.
is this guy still out there having conversations with people on
Yellen? What's the president of Ukraine? He's there.
Zelensky.
Yeah, he's going to be there. All the big politicians and stuff, all the big BlackRock, they're all going to be there. He's a free man.
I don't get it. I don't. My head is. I just don't understand.
And he's getting paid to speak.
Yeah. So she still has all these dogs in the ark. I don't know, whatever. She owns some GBTC at 40. You know what I mean? Like that's just perfect example of having the reverse Midas touch. You literally, it'd be like if I bought, Laura, if I created a fund that like, you know, owned your house and it was trading at a 40% discount to what your house could sell at in the market in Baltimore. It's insane. It makes no sense.
She and Kramer should hang out together more often.
How do you know they don't? How do
I
you
know,
know they don't?
Good point. That's a very valid point. Yes.
Everyone on the panel on CNBC is long arc from last year or the year before and stuff, and they still say buy it and like there's hopes and dreams and
They'll eventually be right, Lance.
yeah. She was just on, I think, yesterday or the day before at 2 p.m.
So people are thinking I'm like against this woman. Like I don't like her. Like I would love to have a drink with her and pick her brain. She seems like an amazing salesperson, but
She's an odd duck, man.
she's not a good trader. She's a horrific trader. And when someone is really bad at timing in and out of things, they create like a the virtuous cycle. Have you ever heard of a virtuous cycle? Like if you do things virtuously, good things happen back to you, and then you have a cycle of profiteering from that. She has that kind of in reverse also. So I like to find people like that because you can make money off people like that too, if that makes any sense. You should always have a mush in your circle of people. You should, because they're great indicators of like tops in the market, buying houses bad, refinancing at the worst time, chasing crypto, chasing the next top thing. You should always have, in my gambling degenerate parlance, we call them mush. Like you got to bet on, and they say, oh, I got the Jets too. Fuck it. I take the ticket. I rip it up. It's mushed. It's over. And so you should keep people like that.
Mush.
They mush it. They turn it into mush. Everything they touch turns to mush. So mushes are useful too. You should always have one in your friends, just as a reverse indicator.
Good
And they
to
could
know.
be great people. They're just horrifically, they're just bad instinctually at times.
Make bad choices.
This episode is absolutely priceless.
And
I know,
it's
Roger
the
knows what
reverse
I'm talking
Kramer
about.
effect.
With the
Oh, I
mush
know exactly
reference.
what you're talking about. And and it's true. Every professional trader, everybody who's been in the market has guys like that. Guys who are I have guys like that for oil. I have guys like that for real estate. I have guys like that for interest rates. And when I don't know where I want to go, I always ask them. And if they say left, I go right. It's
Yep.
absolutely true. Jeff is 100% right.
Oh yeah, I have a perfect mush that was like I have to buy like a brand new house in Miami like a year ago, and every New
Oh,
Yorker
boy.
and Californian was coming down here in the middle of COVID. Houses were up like 300% in 12 months, and I was like, "Don't do it, dude." And he's like, "I gotta own a house on the water. Like, help me out." And I'm like, "I'm gonna help you out. Don't do it." But a mush is gonna mush. Even when they start with a lot of money, they'll still figure out a way to F it up.
Uh-huh.
A mush is gonna mush. Well, Jeff, while
Darn.
I have you, I do want to talk about your strategies. You have a strategy where you look for money flows, early signs of money flows. Why don't you tell us about that? Because I think that's super important right now. And
Oh,
we're just
yeah.
about to have a new month, right? That's when you release your new picks.
So my
Next week.
strategy, let me share my screen. I'm gonna talk about it. But before I get into the presentation, so if those of you guys have Money Flow Elite, you can be excused. You can go. My class is over. But for those of you that don't know about it, stick around because it's a really cool strategy, and it takes advantage of trying to read the tea leaves of what institutions are doing monthly and what stocks they're accumulating and which stocks they're dumping, because they do things in a very they have like a methodology to it, and they're consistent in how they have to accumulate positions. They can't do it in like half an hour. But December and January are the best months for this strategy, the year end and the year beginning. So I know I'm coming across as like extra animated today, but it's because I'm legit excited about the markets over the next 2 months. And we've had a little bit of a like boring month. I thought November was kind of, I don't know. People are just like sitting around and eating stuffing and shit. But I think December is going to be off the chain. And I think that January is going to be absolutely insane with all the stocks that people are going to get back into, because there's like very discernible December effect in January. And I'm not talking about what mom and pops are doing. I'm talking about the big boys and how they move size around and tens of billions of dollars. So today I want to open your eyes and I want to talk about the special December opportunity. It's based on a predictable, repeatable monthly phenomenon. It happens within the first 2 trading days. Every month there's a rebalance. Most people wouldn't know this unless they worked on the street. Every single month, massive flood of money, capital pours into very specific funds, roughly 25 billion on average. And the sudden surge of new cash forces large Wall Street institution funds to buy stocks. I found that Wall Street loves to dip their toe in the water on certain stocks at the beginning of the month. They test them out. If they like what they see, they ride them higher and higher all month long. You just need to get in ahead of time, ahead of this whole process taking place over the month, or very early, I should say. So here it is happening in real time with Vertex, a trade alert I sent out, a real life trade, not a hallucination or a back test. This was a trade alert that we had in the Money Flow Elites. So I saw funds probing the stock, and I saw massive volume spike, and a huge candle on the 1st of December, almost 4 times the average volume on the first day of the month. And they do this to see how sensitive the stock is to a large purchase, right? So they're testing the impact they're having on the price. If everything checks out, they spend the rest of the month accumulating the stock. The accumulation results in the stock price going higher and higher for the rest of the month. You can watch it happen again and again. Happened with ATI on the 2nd day of the month. You had mega volume here. You had a gap up with a massive bar, which would be a great momentum signal for any momentum traders out there, like IBD type people. And voila, ATI within a month, 96.8%. Also, Schlumberger, another household name. I'm not talking about like wild penny stocks that people are pumping and dumping. One of the largest oil exploration companies on planet Earth, right? But if you do math, you could see that a $610 million flow was happening, which was an atypical amount of money for the beginning of the month for that stock. And corroborating that story was a beautiful, massive candle on the upside. Schlumberger was a 200%er in 1 month, okay? But here's how I track it. I use a Bloomberg. It costs us about $25,000. Roger likes to talk to me about that all the time. And that's not cheap. It's not cheap, and I will admit it, but it has utility. The terminal has a built-in algorithm that looks at every stock in the market. It scans for the exact money flow setups that I just showed you, both long and short. Here's a behind the curtain screenshot of what it looks like. So this was a real life sample of it. You saw Coterra, another energy company, up 33%. You saw FedEx was getting smashed that month with size, with volume. That's my list. So a massive $270 million money flow surge into the stock on September 2. Big volume, big candle. This is visually what it looks like. I like numbers. I don't like pictures as much. So I have my thing scanning it from a scanner score. Those that took the trade early on this one crushed it. Not 100%, not a 200%, not even 300%. There was a 423% within a month in Coterra. Now, that was the best trade that I issued out last year. But hopefully, it's clear to you that at this point, we're not just throwing our money into the S&P, right? We're not just buying the market. We're trading ridiculously complex. I know Lance was talking to me about some dude that we know outside of our Wealth Press, like that was doing some crazy condors that required tons of money, and like for you to sit there nonstop all day. This is not that. This is not that. And I want you to reach your goals in a very simple fashion. So it's important that you understand, though, that your timing today at the end of November, when we're about to get into the 2 best months of the year, could not be any better. So we've had some of our best months since the S&P crashed from its peak in January, down 24%. How? I have a built-in hedge in this portfolio. That's why it's a complete portfolio. At the beginning of every single month, I give you 6 standard money flow trades, just like the ones I showed you. So we're betting on the upside. Last month, we had a couple of killers I'll talk to you about at the end of this. But because of the extreme volatility in the markets, and I don't know what month is going to be when the big bears come back. Roger was showing me some incredibly compelling evidence that December is going to be very bearish. I'm leaning in that direction too. I hedge out this portfolio. So I give you 3 strategic short positions and sometimes an extra one, an extra put. We look for the exact setup I just showed you, except we play the inverse to the short side. I call it a money flow cluster. Look what it looked like in January, right? You got losers. This is real life, guys. Real life recommendations. You have losers, but then you have these big mama Lukes over here, right? 200%, 352%. So the whole cluster, winners and losers, was a 77% win. That was a total profit on $5,000. Would have been $3,861 had you taken my real life Jan signals, all of them. As the market crashed, that's what we did. The hedge position saw our put paid us like crazy that month, and we had a 352% in DGX. Watch it happen again in February. 80% for the cluster, 4Gs on 5K. March was more sober. We had 2 massive wins, right? 27.6%. It's not every month that it's going to be so massive, but even when the market's crashing, we're delivering decent results. 27% overall in the month. So I can't promise you that every month we're going to see massive success. Nobody can. But by sticking to the rules, this strategy has produced 12% monthly returns on average in 2022. 12%, it's nothing to sniff at. Listen, Sam Fried or SBF was telling people he will give them 9% a year in fake money, and people gave him hundreds of billions or tens of billions of dollars to do that. So 12% in a month, 2022 in the bear market. If you analyze that or annualize that, that's 140% total return in the worst year since 08. So here's why it's critical. And we're more long than we are short, which is the crazy part about it. Here's why it's critical for you to take action today. December effect, like I was talking about earlier. Fund managers are trying to make their yearly performance as good as possible before the end of the year. I know because I used to be one. These guys want their stocks to look as good. They have to be in certain names. That means selling out of losing stocks and shifting money into the highest performers, trying to move them as fast as they can before Jan 1. PMs will be seeking to apply window dressing to their December 31st holdings to improve their optics while also pushing up the price of their largest positions. And that was in the street.com. I didn't say that. This is not my quote, but this is a phenomenon that I've been playing for many years. Right now, we get a chance to harness this phenomenon, gain an edge in your trading by tracking institutional money flow. Look at some of the top winners over the past few months. 100% in Expedia, 240% in Para, 76% in Len. Netflix was 61%. These were last couple of months. Apache was last month. This month, we had a massive whopper on DD. I've been talking about this on this show a lot. This boring stock, we were up about 300%. 300%. And this last month, we're closing it today. We also had Win, which was another double bagger. So today, you get a chance to get into 9 brand new money flow trades that are getting triggered in my Bloomberg, inside my premium service. Just hear from some of the best students. Listen to Zach from Augusta, Georgia, home of the Masters. Doubles, triples, and even more. My account grew 600% and saved so much time researching. I also give you guys research. I give you the write-up on what big catalysts can make them like supersized returns. $1,591 profit, annualized 152% and 109% on trades. Ed said from Arizona. Very convincing for me. Thanks, Jeff. More than $1,300, a 90% gain. And like I said, you can expect 9 trades on average per month. You get the entry, you get an exit, you get the stock, everything I think you're going to need. And they're all coming out. December phenomenon is going to be massive. It's one of the best months of the year to trade. A more remarkable 123 percent total portfolio returns, all trades, winners and losers in 2022. So I'm going to kickstart. And it's like the beauty of this system is it doesn't require you to sit around all day long watching stocks. You have hedges on all the time, which can help you sleep at night. I know I've been liking to sleep at night with hedges. So I'm going to kick off this Money Flow Elite experience with how to trade flows with options. So if you all don't know how to use options, we got training in Money Flow Elite on how to trade global money flows. And to maximize your learning, I do review videos. I talk every week about it. And it's like an unfair advantage. You're going to see everything that I think is coming down the pike for the rest of the month. You get 24/7 secure access to our members portal, which is the best in the business. It's super clean. It looks awesome on your iPad, and it's totally secure. You're not getting hacked. My team is based in Jax. We have a VIP hotline. They're sitting near Roger, actually. They're the best in the business. They're super nice people, way nicer than I could ever hope to be. They're extremely friendly. They're specially trained to handle any questions you got to have. And we also kicked in a manual about your taxes. I'm not a CPA, but as a hardworking, self-made dude, I believe in keeping my profits, and I know you do too. So we got a CPA to put this together to list all the ways that you're entitled to keep your trading profits, and I find it to be super valuable. I also just got off of one of these. I do a monthly coaching call where you can live ask me. And I'm doing more and more of this stuff. I do them alone. Sometimes Lance and I go live. Sometimes Roger and I go live. And we like to answer your questions. But I think it's going to be more and more useful because I think it's only going to get harder next year, believe it or not, than this year. And so in those live monthly coaching calls, you can ask me anything and I'll answer it on the spot to the best of my ability. So I hope that you see that I truly want you to have everything you need to succeed. That's why I'm offering all this stuff. We could piecemeal this bad boy out, charge a ton of money, but we don't. We package it all together. And I want to throw in one last cherry. You get reverse money flows. So you can see how to make money on the downside when they're puking stocks. That's going to be an eye-opener for some of you guys. 2022 has been a disaster. You've seen stocks get blown out. But for Money Flow Elite members, we have that built-in hedge. We're not trying to cherry pick the bottom of the market. We don't care. We don't need to know when the exact bottom is, when the exact top is. So what we're really looking for are the names that Wall Street's piling all their big-ass cash into every month and the ones that they're puking and dumping. And when the S&P falls 10, 20, 30%, these reverse money flows become a gold mine. So I've been able not just to save the positions, but help turn the monthly portfolio into a sizable winner. So for example, in January, S&P fell 5%. We did 77%. S&P was down again in February, 3%. We did 80%.
Wow.
So it doesn't matter. And it's worth both ways. In March, the S&P jumped 3.5%. We did 27.6%. So of course, no strategy is perfect. You're going to have money. You're going to have you're going to have winners. You're going to have losers. And all things considered, that would have been $9,256 in profits after the first 3 months of the year, while everybody else was like drowning underwater as the market was tanking. So what makes Money Flow Elite, unlike anything I've seen, you got a complete portfolio, 9 picks, you got that power cluster in a bull market, sideways market, or a crash. Don't just take my word for it. Check out these, read these while I drink some water. Look at what Rumal from Brooklyn said.
I like what I'm seeing here, Jeff. This is very good, and I mean, this is perfect for the time of year right now where we're at, especially with the volatility that I see coming up ahead.
I mean, I don't know about you, but I like to have hedges on right now because we don't know what's going to come out. You know, what comes out in the middle of the night and changes the whole planet.
How about what comes out at 1:30? You know, I
mean, right, exactly. Buck started in January, and that month alone paid for his entire subscription, a lot more. So those are some of the big, incredible stories we had. The guy paid for it in his first month. All of these people have one thing in common. They're opportunists. They saw an opportunity and they took action. Action Jackson. So now you're thinking, in the first month of 2020 alone could have earned $3,861. Money Flow Elite is going to cost an arm and a leg. I wish that was the case, but this is not. Honestly, I don't actually wish that's the case. This is a strategy for normal people, not for pros, not for people that want to do really expensive iron condors and pick up pennies in front of a freight train. This is for people that are new to the markets and don't have the time to sit in front of computer screens all day long. And so I think the program's worth more than $3,861 a year. But of course, I ain't asking for that. Today's deal is super low. Don't forget all these goodies. When I see it like this, it kind of makes me, I'm looking at like this picture that we're all looking at right now as like my work. I'm looking at it as like our work, not just mine.
It's
like
a complete
our
program.
whole team. Yeah. Like, me doing a video call, our team answering you guys and sitting there dedicated. The amount of work that goes into creating like this, like super streamlined, easy to use interface, right? All this stuff, the work to set up the live coaching calls that the editorial team does. All of this stuff is hard and should cost more money because it requires more man hours, et cetera, et cetera. But we're doing it super cheap. We're doing it super cheap. And you got the crash hedge every month, tons of perks for new members. So today I want to make it a super no-brainer. We've sold this thing as much as almost $1,997 per year in the past. I don't want you to feel like you're going into Christmas, going to go broke. I think we're in a recession. I think it's going to get worse. So I'm not trying to turn anybody over and get that loose change out. I want to start you off with the 9 new trades in December for just $997. Psych, not $997, $497. I think not. It's going to be $97 for your first month. I mean, you can't even insure a like the safest driver in the world for a month. You can't even get a Geico for $97.
I can't even go out for sushi for $97 for myself.
I know. Yeah, and I know you're hitting Papa John's an hour later, Lance, because you're a hungry boy. You can't just eat like $97 worth of sushi.
That I'm buying a bottle of sake that costs $97.
Yeah, and I'll tell you this, the portfolio so far in 2022 this year, while the market's down over 30%, is up about 123% from last time I checked. So
yeah, that's going to be it's going to be more once we book today's final results.
oh, well, there you have it.
This month was
So,
a good month too. In November,
Yeah.
we had a 300%er. We had near a two. Like it's going to be
Win.
winning all over the place. I win over here. I win over there by winning, as Charlie Sheen used to say. So
yeah,
$97
$97, folks. That's a deal of a lifetime. Get into wealthpress.com flows. Go to wealthpress.com/flows. Do it now. Follow the link that WealthPress just posted. Get in on this 30-day no commitment trial. You get the House of Cards stocks. I mean, 9 new money flow trades.
I'm telling y'all, this is the
Actually,
best 2 months for this Straddle for money flows of the year, December and January.
Actually,
the
you wanna
phenomenon that I
follow-
take advantage of.
You
Go
want to
ahead.
follow the link in the chat.
Yeah.
Follow
Yes.
the link in the chat.
The link in the chat. Yes, please go to the link in the chat. Thank you.
All right,
Yes.
I'm going to stop sharing that now. Let's go.
Yeah,
Got the link.
yeah, that's
$97.
yeah, that is a really
That
really
is a
good
great
deal. And Jeff, do you hold all trades for 30 days or some you
No,
close out
sometimes
early?
we hit our limits and we get out. Sometimes the circumstances of life have changed for a company. And, you know, sometimes we have to get stopped out because I just don't want to sit there and get wrecked much more. But I typically like to keep it hedged and I try to keep the hedges on. And yeah, it's a fun system. I know people who look at it and they use it for a lot of reasons. I mean, they look at it because I put my research out in the world and we are still a free society, unlike some countries in the world that we're seeing with the World Cup, et cetera. We're a free society. So I put my research out to the world and you can take the research and you can fade me like I do mush people. I don't advise doing that. You probably get your butt handed to you. You could take the research and say, oh gosh, they're doing a reverse flow in a stock. That's my favorite stock. And then you can watch it disintegrate all month. I don't know, but I put that research out there because I know it's a really good way to track institutional flows, which take about a month. They don't take half an hour. People don't just put on trades for you know, tomorrow when they're running.
So a couple of questions.
Dollars in big books.
A couple of questions, Jeff. What's the price after the first month? Do you have any idea? Or I just don't know. I'm curious.
It's 97 each month thereafter. I
That's
just looked
beautiful.
at it too because I saw it in the chat.
Okay, thank
So
you for
it's-
that. And
Right.
I had a
yes,
Tesla
Jeff,
book.
you could definitely add a month to an existing account. Yes, without a problem.
Yeah,
You
we'll
should
take care
definitely
of
do it.
you. I want to take care. You know, one thing that we seem like if you're watching us, like we're all coming from different backgrounds, which we are, which is nice. We have a diverse point of view. But one of the things we all have in common is we want everybody to be very happy and satisfied and learning and enjoying the program. So, you know, $97, I think you can afford. And yeah, I feel good about it. I feel good about putting this research into your world, into your universe, because I think you're going to find it super useful.
Well, thank you, Jeff, for doing this. This is a great treat. Folks, join. People are Murray says people join Lifetime. This is paid. It's paid for.
He's
So
paid
I
for
mean,
his
they're-
lifetime already, I think is what he's saying. Hell yeah, Murray,
Yeah.
let's go.
yeah. Kevin says I'm in first time with Jeff. Folks, take advantage of
Welcome.
it. Take advantage of it. Go to wealthpress.com/MFE, or as Laura just pointed out, click the link that will be in the chat in just a few seconds. And a lot of people have Lifetime. A lot of people are happy. A lot of positive feedbacks. You definitely want to get into this program. I learned today. I was shocked to find out that November is over. I was like, what? November's over? We're in
Yeah.
December. I honestly, I'm still
That's because
like,
you're still eating your kids' Halloween
That's-
candy.
thank
that's
you. I
laying
was
around the
just
house.
about to say that. I'm still
I am
eating-
too, dude. I'm still crushing those Twizzlers.
Yeah,
in the
I'm
middle
still
of the
like
night.
thinking about her her dress and for her Halloween costume. I'm still watching those Halloween movies. I'm in the Halloween mode. So I'm not ready for the year to be over. But folks, time waits for no one, and it's not going to wait for you either. Go to wealthpress.com/MFE and join Jeff. Do it now. Do yourself a favor. And it's a very low risk to reward. And if you don't like it after a month, you cancel it. Big deal. If you love it, and I think you're going to love it, you continue with the program. No stress, no gun to your head. Real simple, effective, and clean.
Rob said his first month with money flow and very happy with the ROI. Let's go, Rob. Let's go. Yeah,
Beautiful.
November, December are going to be awesome. I mean, I'm super jacked up. I took a little bit of a vacation, so I'm renewed. You know, I drank a lot of drinks and watched football and bet on it.
A
And
lot of Capri
Ate
Suns and high
turkey.
seas.
I still did my push-ups though. I did my
Yeah,
push-ups.
Jeff
for
told
those
me he did
kids.
1,500.
No, I did 3,000 push-ups in November
3,000
for
push-ups.
St. Jude, for St. Jude Children's Hospital. It was a-
Beautiful.
That's a
Love
lot.
that. That's
I'm gonna
great.
keep it going too. I think. Why not?
I got to get out of here, guys. I got a
Let's
session
go.
in 10 minutes, but I will
Bye.
see you later. It was really nice to catch up with both Jeff, Lance, and it's always a pleasure to see Laura. I will see you guys later. Please, please, please go to wealthpress.com/MFE. You're not going to be paying $97 for this forever. This is a premium service, a good service. And Jeff is gearing up. He's red hot. Do
You
it
gotta
now.
go.
and I'll-
You gotta go heavy into the end of the. You can't
Yeah.
limp into the end of the year, and you can't because you're definitely going to come into January with that weak ass momentum. So I like to finish the year strong to start the year even stronger. So if you get where I'm going, that's how you got to play it.
The people in the chat are asking about the VIP membership option. Just call that number, that 877-212-2649. They can talk to you about annual offers, which you can get a big discount for, as well as the VIP. They can
Lance
they
and I
can
have
hook
been
you guys
talking
up.
about it. Lance and I have been talking about how how we've been like hibernating almost all November.
Yeah,
and just
I'm
ready to pounce.
push. I bought a 50 lot yesterday. I'm ready to slang 100 lots today.
Let's
Join me at
go.
1 p.m. for institutional.
Yeah, I was
order flow
about
at
to
the
say
options
that
market.
too.
I'm ready to slang
hit
some
Lance's-
size.
You got it. You got to go into Lance's option class. That's unbelievable. I'm going to be there too.
I need a new
boat.
boat.
Put me a link.
Time to
Put me a
trade.
link. Put me
Get
a
some
link.
size going.
I want to be there.
Yeah, for Lance's event, Francisco, can we drop that link back in? Lance's event at 1 p.m. is free. This course and unusual options training, every time Lance does training
yeah.
on this, it's some of the most popular training we do at Wealth Press. People absolutely love this training.
Yeah, it's awesome.
So
All right. Peace out, guys. Thank you for your time. Great
Thank
week
you,
again. Thank
gentlemen.
you, Laura. Hope you get the package on time.
yes, both of them.
Hope you enjoy the booze.
Don't tase me, bro. Don't tase me, bro. You remember that one?
Yeah,
Don't tase
man.
me, bro.
Oh.
The classic.
So everyone, we'll see you next week on Wednesday at 11 a.m. for the next roundtable. Thank you all for joining us today. See you at Lance's thing at 1 p.m. Take a look at Jeff's offer. Thanks
It's
so much.
the end of the month, but get ready for the first of the month.
Sing it, baby. Bye all.
Bye, everyone. I'm going to be closing down the room. So if you haven't yet, go ahead and open that link for Money Flow Elite so you can have it up, check out the deal, everything you get. And then also go ahead and save that link for Lance's event at 1 p.m. Eastern. So he's going to be breaking down, how he looks at the market, specifically unusual options. It's really interesting. So save that link as well. See you soon.